is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Thursday, February 12th, 2026. Hope everybody is having a good start to the day. We are lucky enough to be joined by both Graham and Nathan. Hi, guys.
Hello, hello. How's everyone doing?
Hey, everyone.
I got a question in there. Option X says Option X is still indicating AMD. I am not sure what you mean. I think that was Bob. Still indicating AMD. I'm not sure what that means. Let me know what you're asking there. I can try to clarify it. But I hope you guys are doing great. We had another beautiful trade on McDonald's. So that's back-to-back over 100% winners on our earnings trade. Always nice when you can get on a little streak like that. Now, I do want to say, by the way, if you check McDonald's, I mean, still within 80 cents of the strike. So you'd probably be up even more than what I closed it out for, which is like 140%. I do want to say something that is important. Just because we made, 150% and then 140% back to back on those, doesn't mean every earnings trade just do a calendar and it's automatic money. Both of them literally hit the strike that we traded at within 30 minutes the next day. So that is uncommon. Normally, they're going to move some, and then if we can grab 20 or 30% within the market maker move, that's still going to be, a pretty nice trade for us. In this case, we back to back literally hit the strike on the nose. So just keep that in mind. Other than that, I don't really have a whole lot. I guess if we just preview where we're at real quick. But Graham, I still have only taken, I think, 3 total lotto trades. I am looking at 3 for 3 over 100% winners.
Oh, wow. That's awesome.
This thing is insane right now. I mean, just insane.
You've got a better win rate than me. 100%.
That's what I was going for. I'm going to stop trading it forever now, even though I'm losing money by not, just so I can have a higher win rate.
Yeah.
You're the anti-Josiah.
Yeah, exactly. But yeah, yeah, Bob. So when you say still indicating, I think what you mean is it's in my account. So that means it already got filled. It's just sitting there as an order. Now my take profit actually didn't go through, so I got to fix something there because my auto take profit didn't get set up on AMD. But here's where we are on the day. Really nice green across the board for the most part. Gold's a little bit down. Bonds are up. RSP just still kicking butt. If you guys took that RSP trade, it's kicking butt. If you took any of the sectors that we called out here as the best sectors at the beginning of January, folks, they are just crushing right now. Like just take a look at this. This is the weekly chart. This is GE, which is one of my 100+% winners from Graham. Thank you, Graham. But XLB looks like this right now. We talked about the beginning of January. Incredible. XLI looks like this. Incredible. XLE looks like this. Insane. So these sectors that we talked about a true rotation happening, I mean, that's what they look like. XLB, XLI, XLE, just monsters right now. Now they're probably a little overcooked to feel comfortable trading them directly, but I think some of the stocks within those sectors are worth keeping an eye on. We'll see if technology bounces back here a little bit. Looks like it wants to maybe. So let me just refresh this, see where we're at. 0.15 on the day. Again, that RSP doing really good work there. You can see that in the sectors. Really healthy underneath right now in the market. I mean, the two red sectors are down less than 0.25%. Technology needs to figure out, is it going to participate and really rip us higher, or is it going to hold us back and make it continue to be a slow grind? That is the big question mark right now. XLF, not as strong. You can see here, I'll show it to you. This is financials. Had a big run earlier, kind of gave it away, and then some of the earnings missed and we flushed and just haven't been able to get really going again. So I still like financials, by the way, just hasn't really been able to get its feet under it since those softer earnings. Here is our heat map on the day. Again, 50-50, but a little bit healthier on the green side, just because of some of the bigger cap names there at the top of the list. GE, again, right there near the top. GEV, its cousin, up there. Cost, Caterpillar's just been insane. Coke is up there. TSM, which I think Graham called out as a potential trade a little while ago, is up there. So just, yeah, really nice across the board. And then, you get a good mix at the bottom too. Just to be fair here, we have a pretty good mix of some discretionary, some retail, some tech in the bottom of the top 100 as well. One other thing on my list before I hand it over to Graham is that this heat map, these different things, which I normally just cover a couple of them, but I also have some really cool things in here with the movement ratio and the stable stocks and my 3 river picks and my true momentum. I finally got this all set up for that Telegram to post these updates into you. All my HQ members, you should be in that channel right now. I sent it to you at the beginning of this week or maybe last week. But I'm also going to do a special class tomorrow, starting with the members. I mean, everyone can get access to this, non-members as well, but I'm going to start with just the members and just spend some time tomorrow walking you through each tab, what it's designed to do, the context it's designed to give me, how I would use it actionably. So please, if you're interested in using this, just keep an eye out for our class tomorrow. Also have a fun little trade we're going to do in that class as well. So I think that's going to be 2:30 tomorrow. So yeah, keep an eye out for that. I'm just going to take some time, walk everyone through the dashboard. And then of course, if you guys want to get access to it for the massive price that I'm planning on charging, you can do that at the end of the class.
And if you're not a member of any of Nathan's programs and want to cheat your way in for just $1, here is the link.
Awesome. Well, a couple things to show you guys before we jump into the training today. Here's the lotto board. I want to give you guys a pick here if possible. Now, if you guys were here yesterday when I tried to give you some picks, most of the mid prices showing weren't accurate. So the team is still working on that. It was, again, working beautifully Friday. I'm not sure what happened, but we'll go ahead. We'll get that cleaned up before it's out with you guys so that ideally, it's never going to be 100% perfect, but ideally 90% of these are going to be spot on with the actual market prices. Now, this is one. Actually, let me just go ahead and search. Iron is a ticker we've traded before and had some success with. If we look at a chart of iron, let me go pull up a chart here. Here we go. All right, let me go chart of iron. And that is not iron. That's a much prettier looking chart. Here is iron, and it's one of those AI boom data center plays where it can chop for some time and then squeeze out of nowhere. Chop for some time, squeeze out of nowhere. And right now, it's kind of in this limbo point with the rest of the market, with the rest of the QQQ, where it's lagging behind temporarily. But if my analysis is correct and the money comes back into the large cap tech stocks, as people are still excited about AI, iron could see another move higher. So this one is going to be more of a true lotto play where it's not a high conviction, like a high conviction entry right now. This is one I posted in Telegram yesterday. SanDisk, beautiful trend, little pullback, started moving higher. So I posted in Telegram. This is a beautiful setup. Iron, on the other hand, is not as pretty, but when it moves, it can move fast. So let me go ahead and pull up the lotto board here. And this is one that I just took. I just did one contract. I'm just doing one contract right now as we iron out the kinks. But here is iron. I will throw this in the chat.
I can
It's
do
a
it if you want.
413% payout here if iron gets above 51 or 52, excuse me, over the next month. So to show you visually where that's out on a chart, let me just do this. We don't need a huge move here. 52. So my crosshairs here, if it just makes a small bounce back, if money rotates back in and we see stocks start going to all-time highs again, I believe this one could really play for us. So David, I'll let you type this one up
Yeah, I got it.
on iron. And there's a couple more here on iron that we can look at as well. This one I just thought was the best risk to reward with not cutting the time too short. So there's a lotto pick for you guys on iron. Let me know if you are ready for me to jump to the next one.
Yep, go ahead.
All right. I did see some other, what was that ticker I just had up? Amgen. All righty, let's take a look here. Let's see if we can get some good pricing on this one. So Amgen, much prettier trend here, kind of more like that SanDisk one. Now this one is a healthcare stock, which we know healthcare stocks have been doing quite well. Small pullback here in Amgen, and it looks like the momentum's still green, but if you look at the magic momentum, it looks like it may be trying to gain some steam here, kind of similar to look this move. And we saw this under the hood. See how it's ticking higher just like this? So that was right about here before it had a big move. Now, granted, that was also with earnings, but we have seen this happen plenty of times before with this stock. Another example here, little tick, moved higher. So this one on Amgen gives us a lot of time not to be consumed, or, you know, that's what I should start saying, a lotto time. It's a lotto board.
I get it.
All right, let's go ahead and look here at the prices though. So we'll go out to the 17th of April. This is a 2-month hold time. Plenty of time here for Amgen to make the next move higher. We're gonna look at the April 17th, out of the money debit spread, see what kind of prices we can get. And again, keep in mind, 88 cents. So a little bit better than I believe what the lotto board was showing. 88 cents risk, or $88 to make 412. On Amgen, I'll let that one sit. We'll see if we fill it. The lotto board was showing 90. So I'll try 90 as well. It's at 93 right now. So about a 400% payout here. And it may not fill. Again, this is still something we're working through right now as we iron out the kinks here. Let me know if you guys get filled on iron or Amgen. Iron should fill pretty quick. It's a high volume ticker. Hey, it's a Dow stock. There you go. Alrighty. Oh, this one could be good. This one could be good. Let's see if it'll load. They may be putting in updates right now because I just sent them a bunch of updates. All right. Here's a stock that's done quite well. CARR. It's not, I don't even think I've traded this stock before. I've had it on my watch list because it's been heating up. Look at the momentum here breaking out. Beautiful
Wow.
trend here. It's an industrial stock. This lotto pick gives us 36 days to potentially see a 300% return. Now, again, this may have lower volume since CARR. I mean, you can see there's still good open interest, a couple thousand in open interest. Trading at 70 cents. It's showing 63, so slightly under a 300% move. But just if this one maintains the pace it's currently at, that one filled right away at 70 cents. But again, just to show you guys here, it's currently on pace to move 7.9% over the next 36 days. The market maker, the options right now are pricing in only a 7.3% move. So you can see here there's a gap between the pace it's currently running and what the options are priced in at. That gives us our little advantage where we're getting in for slightly cheaper than the actual true movement. And in this case, we don't even need it to make the full market move to hit 7.1% to hit here on Carrier Global. Yeah, I haven't gotten filled on Amgen. You guys said it's moved higher. The bid ask was pretty wide on that one. Yeah, it's showing 132 for me right now on Amgen. So you can let it sit to see if you'll get a fill. If not, we'll just move on to the next. All right, where is another one here? Let me see if this Lily one is legit. I don't think this is gonna. Yeah, that one dropped pretty significantly. But at least we have our two for Carrier and Iron. Let me see. Let me see what SanDisk looks like. The cool thing is I can just type in the ticker and it's going to pull up. So it probably doesn't have enough liquidity in any of the options right now. Let me look at my chart. Or because this calculate right now, SanDisk is moving at an 18% move. Market makers are only pricing at 12%. So that's a huge, huge gap here. That's good. That means it's moving at a faster pace than the current options are priced for. But it says no qualifying spreads found here for SanDisk. And it goes out to all of the strikes and calculates the movement. But I believe this should be showing some. So let me take a screenshot. This is one of the reasons we're doing this each day. So I can send it to my team. Also, I believe this one should be showing. $20 more. Move. Sorry, I'm just typing this up to the team. It's maybe, I don't know. I'll let the team get back to me and tell me what's going on. But anyways, this is a real good picture. Now imagine there's options here, but this is a real good picture of what we're going for right now with the lotto board. We want to see where the current pace is outside the market maker pricings in the options. That means it's moving faster than the options have priced in for, giving us an advantage here. Does that sort of make sense? Give me a yes or a no. You won't offend me if you say no, and I did a poor job explaining that. This is exactly what we're going for here. Now I'll pull up my current ones, and you can see here, right now I'm probably about 60% positive. So here's the line in the middle, right? All above's positive, all below is negative. The most you can lose is 100%. They're debits. So that's just a poor pricing. Worst case, it expires worthless. The most you can win, well, there's a lot of upside. So right now, 575% open on NEE. ETN is at 411%, CMI 347, so on and so forth. So naturally, this one winner on NEE takes out all of these losers. Actually, does more than that, more than all of those losers. I could lose three more, well, two more, and still keep all of these winners as net profit. So very, very excited here with the lotto board. Again, I would love to rush it out to you guys right now, but I got to work out these kinks. You guys are seeing the kinks right now too. So hopefully you understand why I'm not tossing this out to the world right now.
Bob said the Textron is at over 500% for
Oh
him.
man, I closed that one out. Yeah, that's the other thing. I've been trying to do a good job of booking profits when I'm up 300, 400%. Like I will probably take profits on NEE today. It's at 581%. I'll look at it, see how much time we have and how much movement, or at this case, it could be buffer room to the downside. But some of them, if I let them run, a couple of them I booked for 300% or so, and they went on to pay 1,000%. So that's something we'll fine tune as well. Could be a case, we talked about this previously, where maybe you take two contracts. If you get to 100%, you book one contract, meaning the next one, you're rolling with house money for the max upside. That could be a way to play it. Jason and I are kind of fine tuning it right now, playing with it, working out the kinks. But again, this is just one contract of each, and you can see up $1,300 on one contract. And these are not expensive contracts. $12, 29, 16, $40, $65, 42. Obviously, as they get up in value, they get a lot more expensive. But this one started at what, $110? Now it's worth 400. Actually, probably started for slightly less than that. Cheap contracts that can pay out pretty darn big. With that said, the lotto board is not what we're going to be covering today, as far as the training goes, and that's because it's not done yet. We still have some work to do here. Des says risks off as they rise. It's not a bad idea. Can't go broke taking a profit. Put to call ratio right now. Let me just refresh this. So I'm having an interesting time here with my good friend bar chart, because if you look here, we have two very different readings. Well, actually, it just refreshed. So yesterday, supposedly, we were at 101. Today, we're supposedly at 0.7. Those are two polar opposites here, which normally doesn't happen in a day over day. Now, I'm curious to see how this one moves over the course of the day and what it looks like tomorrow where it actually prints. I believe we want to check the previous day because this may just be behind or off. Remember that one day it was like 0.5 or something crazy? Either way, with the way it printed yesterday, this should make us more bullish on the markets overall, because we know when the puts have too much control or there's too much volume in the puts, typically that means we're overextended to the downside. So that's just my broad market quick analysis right now. But today, you probably saw on my screen when I was walking through a couple of those lotto plays what the momentum looked like under the hood. Ron, I'll take a look at that. What the momentum looked like under the hood. And today I'm going to walk you through what that means and how you could recreate that on your chart. Oh, there you go. Ron says in Thinkorswim it also looks different. So here's the put to call in Thinkorswim. Showing 0.84 right in the middle. Actually, that's not point. It's 0.95. So I'm leaning more towards that put side. Let's see where it closed yesterday.
93.
Yesterday shows a close of 0.93. So they're all a little bit off of each other. Who's right? I don't know. I'll have to do some digging. Doesn't Roger say only look at put to call pre-market? He probably does. That's why I suggested looking at the previous day's put to call if we're looking at it during the market. All right. I'm wasting too much time. Let's dive into this momentum training right here and how you can get it on your charts as well. It's not going to look as pretty as mine because mine is a premium product here, but I will walk you through the basics of it so you can get the gist of it and also hopefully benefit from it. So over the last year, actually probably 2 years, building out in live trading with a new tool designed to quantify momentum in a way we've never seen before. You've heard me talk about it before. I call it Newton. That's this bad boy down here. I use the lower because I don't want to color my charts all the time, but you can see it here on the chart. I walk through it almost every single day here. Now, this tool has single-handedly helped us get in on moves like GEV, which this says up 173%. It's up about 500% now. Granted, if you traded the swings, maybe a little bit more. Oklo, this one shot up 562% for us. Gold's rallied to all-time highs. This is funny because this flagged it back when gold was 2,600. Gold's $5,000 an ounce now. But not only has this picked up some incredibly powerful investments, including swing trades on HWM, which, by the way, that stock is rocketing today off the back of some really strong earnings. But it's also predicted moves on Bitcoin, day trades on Kava, NVIDIA, Carvana, MicroStrategy, so much more. So today I want to walk you through how it works, why it works, and when to apply it. Plus, we can look at some trades to take as well. So let's start with the how it works. This first section will be strictly talking about swing trading, looking for just swing trade momentum opportunities. So when I say swing trading, I'm talking about a time frame holding 1 day or longer. So 1 day, 2 days, 1 week, 1 month, whatever it may be. Now, when we're swing trading, the basis of Newton uses 2 exponential moving averages. So we use, as our fast EMA, we use the 5 EMA, and as our slower one, we use the 16 EMA. Does everyone here know how to add an EMA on their charts? All right. A lot of yeses. One said, tell me how. If you're using Thinkorswim, any other platform, they're going to be pretty similar. You just want to add a study. You can type in exponential moving average. Double click that or add it. And then you select your period. Right now it's set to 9. So you want to set one at 5. Do it again, set one at 16. Make sure they're different colors so you can distinguish the two. All right, so that's what we're using here right now. So now here's what that would look like on your chart. If you were to add the 5 and 16 EMA, you can see them on the chart. The blue one is the 5-day EMA, 16 is the yellow is the 16-day EMA. So you can see why I call one fast and one slow. When it's 5 days, it's only looking back 5 days of price action. When it's 16 days, it's looking back a little over 2 weeks. So that's why the 5-day reacts quicker, because it's tighter to the current price of the stock. And then it's the same case for the weekly charts, and the period off it automatically adjusts, at least in Thinkorswim. So if I go to a weekly chart, it's going to be the 5-week EMA and 16-week EMA. Same principle. Now the 5 and 16 combo is the backbone of our momentum calculations. Now, someone asked here, why not the 8 and 15 EMA? That may work well. What we did is we took a list of about 50 of the most popular stocks out there and tested these different EMA levels to get our basis, our starting point, and said which one tested the best. And we found that, broadly speaking, 5 and 16 worked the very best across some broad market of stock. Now, if you want to go test an individual stock, it may be curve fit better for an 8 and 15. Now, here's the thing. Most people will trade EMAs as a breakout. So if we get a pop above the 5 or the 16, or if the 5 crosses the 16, then we have an entry. But in this case, that does not give us an entry signal. The secret sauce, in my opinion, the secret sauce of calculating momentum is in taking the difference of the two EMAs, the spacing in between the two. So in order for my Newton momentum indicator to register a positive reading, we need to have higher than average momentum, which simply means we need the 5-day above the 16-day, right? So like this, 5-day above the 16-day EMA, but we also need an expansion, space in between, of 1% or greater to give us that higher than average momentum. If it's less than 1%, we just quantify it as average momentum. Now, on the lower study, which is what I typically show you, you can see that actual calculation right there. So when the 5 EMA is below the 16-day EMA, so for example, look like back here, 5 is below the 16, that's obviously not good, right? That's lower, that's below average momentum. That's where you'll see a red on the chart. And that's a good opportunity if you have a weak stock and you see red pop up, that may mean it's a short entry, or you can buy puts because it means that the stock is moving negative momentum. It's probably going downwards. So you can see move down, move down. Now, here's kind of our in between, our on deck situation. When the 5 EMA is above the 16-day EMA, so 5 above the 16. However, if the expansion between those two is less than 1%, we just get a yellow on the chart, or a yellow on the lower bar. So like, for example, look how tight this is. See, the 5 is above the 16, but it's really, really tight. We don't have a 1% difference versus you can see the expansion here. This is a greater than 1% difference. So when it's really tight like this, we're just on deck. It just means we're trading at average momentum. The stock is probably slightly going higher, but it's not moving at an accelerated rate. That's when we see the yellows on the chart. So let me go see if I can find one here as an example. Actually, NVIDIA is a good example. So here is NVIDIA. This is why it's really important too. All right. I don't have the EMAs here, so ignore these lines. But you can see here when it moved higher, moved higher, moved higher, the 5 turned above the 16. As we can see by the yellow right here, that means the 5 was above 16. A lot of people would have taken that trade and said, oh, yes, we're breaking out, just to get pummeled again. The thing is, the momentum never flipped green. The expansion never got greater than 1%. So it was just on deck for us, not an entry. And of course, it flipped back red again, as you can see right here. And then yellow again. Notice the stock doesn't have to be going higher for the momentum to start increasing. Look at this. It actually went lower during this period, but we saw these bars start to increase. That's because we're looking for the expansion. And then here it popped green. On this day, popped green. That's when we get our entry. You can see it went higher from there. So hopefully this makes sense why the expansion is so important. Because if you were just enter when the 5 is above the 16, you would have entered here and lost. You would have entered here and lost. Instead, we wait for that expansion between those two MAs to be greater than 1%. Greater than 1%. Now, the candlesticks in the Newton program automatically correlate the colors. Again, I took this off on my setting because I want to personally see green and red days. So I just use this lower setting. They're the exact same, though, as far as the colors go, the color combination. So what's going on here? Well, Newton is not only calculating the short-term trend with the EMAs crossing over, but also, it's important, the acceleration of that move. It's looking for acceleration under the hood, not just broad momentum. For example, when it flips from red to yellow to green, that first green stick is pretty close to that 1% reading. If you look all the way over here, it's going to be around that 1% expansion. That's because this is an above average momentum play. It's accelerating. And then that acceleration continues to the next candle and the next and the next. See, this momentum is growing. So it goes from 1% to 2% to 3% to 5%, speaking towards the expansion. That's the acceleration like this. If you see the EMA start doing this, that means the stock is going like that. And that's exactly what we're looking for here. Notice how the stock explodes accordingly. So you can think of it like this. Think about an airplane that's taking off. In the beginning, it's on the ground, waiting to take off, no momentum there, right? Stationary. That's like when a stock's momentum is negative or even neutral overall. It's just kind of parked. Not a time you want to own the stock, not a time you want to be buying call options necessarily. But then the engines start roaring, the plane starts to gain steam. That's like when the 5 EMA first crosses the 16 EMA, and we get that above average reading. That's when we want to enter. When we first flip to green, when the expansion takes 1% or more. And after that, the plane starts climbing faster and faster. That's when we see these big momentum moves, which we can ride along for as long as the stock is accelerating at that above average momentum, as long as it's still green. And then as the plane is getting ready to slow down, getting ready for landing, that's when we take our profits when it flips back yellow. Now, this works perfect for stock trading. Obviously, if you're trading options, that's like a 3-month hold time. So you may actually trade the swings here and have a little better success, which we'll touch on in a moment. But generally speaking, you can buy on green, sell on yellow or red. Now, here's how I prefer to trade at my personal use. For bullish long swing trades, number one, you want to know the strong sectors. We do this every Tuesday. When I do my market breakdown, I walk you through seasonally what's the best, currently what's the best, and where I have my eyes. You don't want to be trading sectors that are lagging behind if you're going long. That's like swimming against the tide. Number two, you want to use a scanner to search these stocks. It'll save you a lot of time. I built one for the Newton members, but if you're not one, you can go build your 15 and 16 EMA, set a rule of 1% distance, and build a scanner there. Third, you want to verify strong bullish trends. You want to make sure the stock's a pretty looking stock overall. Maybe it made just a swing low and it's headed back higher. Typically, you want to avoid holding through earnings. Momentum readings can be very helpful. They can help you make really solid money in the markets, but they're not going to tell you if the earnings result's going to be positive or negative. That's a coin flip. So if you're going into earnings, just take profits there. And then what I like to do, personal preference, enter on first green, take profits on first yellow bar. So like here, enter on first green, take profits on yellow. If you wait till red, you end up just probably costing yourself a little bit. However, just as a note, there can be instances where it goes yellow and then back to green, but then I can just re-enter again. All right, number one, knowing the strong sectors. Again, you want to be trading with the stock that is swimming with the tide. Right now, we've seen energy be really, really good to us. Healthcare be really good. Industrials, the stocks that are going higher with the market versus some of the other sectors. What was our worst sector? Discretionary has been terrible. Don't really want to be trading discretionary stocks to the upside right now. So even if Lululemon posted a green candle, it's probably one you'll want to pass on. Now, number two, ideally, the stock is a leader within that sector as well, relative strength. So we look at the sectors within the markets. I show you the strongest to weakest. You want to kind of do the same with the stock in each sector. So let's say you're doing a trade on NVIDIA, and NVIDIA is at the bottom of the tech sector. It's lagging behind. You probably want to pass. Go find a better stock. Good example of this, and I am actually, you guys think I may never make a mistake. I think I do. Good example of this is, let's look at like Micron, for example. Chip stock. That thing's a beautiful trend. Actually, look at this. Should have had this class yesterday. Yesterday, Newton flipped green. Momentum turned positive, above average. AMD's up 3.5% today. This is a strong stock leading that sector versus AMD, which I'm currently holding the bag on. Not as strong of a stock. Oh, wow. Looks like 60-minute just hit.
Nice.
On XSP.
Nice.
Look at the difference in this chart versus that one I just showed you. So they're both in a strong sector, right? Tech, well, maybe it's not the strongest right now, but generally speaking, tech can be very strong. So it pretends tech is strong. Which one would you rather trade, AMD or Micron? Answer is, or should be, Micron. Now, again, currently, I thought AMD was going to break higher from this swing, and it didn't. Probably should have sold on red, but that was earnings, which I broke all of my rules here. But I like the stock. So with all that said, if you guys are looking for a good entry right now, actually Micron looks like a beautiful entry as far as Newton goes. Granted, tech is not a leading sector right now, so it's not passing all the rules, but this is exactly kind of the chart we want to see. So again, if you have Newton, use the long scanner. It will show you the stocks with their first day of green entry, so a fresh entry. Makes it really easy. Typically, it's a list of 5 to 10 stocks on any given day. So just sync it with your chart and flip through them. So if you have Newton, give me a yes in the chat if you do. Give me a no if you don't. Oh, SanDisk. Not good for my stock position. Still up 6%, but could have a good entry here for you guys today on SanDisk. All right, getting distracted. Oh, there's SPX for 60-minute as well. All right, let's go active trades. So you can see here about what, 10 stocks, maybe 12. If you have it, I have the scanner built for each in the members area. Again, if you want to try and recreate it, guys, we're using the 5 and 16 and 1% plus spacing. Holy moly. ACAM. So what's going to show up here is the ones that are having their first day of green. Let me just make this a little tighter. So you can see first day of green here. First day of green. First day of green. So now, now you want to find stocks that look like this that are on their first day of green. That's an entry for us. So Ross right now, it is a discretionary stock. We don't like consumer discretionary right now. However, I believe that's kind of miscategorized. It's more like Walmart. If you think of Ross, people, when discretionary spending goes down, stocks like Lululemon get hurt, right? Ross is a budget or more of a discount store, so it's more of a staple. It's more like Walmart or TJ Maxx. So I actually like Ross right now. It's got its first day of green here for us, which means potentially break out higher. Let's see, here's the last time, first day of green, higher, higher, higher. Take profits on yellow. Let's see, this one was earnings. Let's see, first day of green, went higher, higher, higher. Take profits on yellow. Real nice trend here on Ross. So ROST is a great one for today. But again, sync it with your chart so you can just flip through like I am. This one looks great too, a healthcare stock. I actually might go check the lotto board for this one. Let's see. No qualifying options. Bummer.
You want me to post an old replay for Newton?
Sure, if you want to, yeah. You can do that if you guys want to check it out later. Ross, the market maker moves too high. All right. No lottos, but really pretty setups here on Newton. So this scanner makes it really easy for us. So again, verify a strong bullish trend. Avoid stocks that look like this. So just because it's on the scanner doesn't mean you should buy it. For example, this is not a pretty trend. Not a pretty trend. So make sure we have, let me see if I find another one for you guys. Like Ross is an ideal trend, beautiful trend. And then also avoid holding it through earnings. It's just a coin flip. You don't know what's going to happen. Now, bonus verification here, and I think this is really important, often overlooked, but very important. Confirm your entry with a weekly chart. So here's Ross, right? We know momentum on the daily is green, but let's flip over to a weekly. Well, I already knew this was going to happen, but the weekly is also green. Versus, let's look at AMT here. On the daily, it's green, right? We obviously know it's not a pretty trend, but if we go to the weekly, it's not green. It's red. So that's why I like to use the weekly chart for confirmation. It'll just increase your accuracy. The funny thing is, like I said, we tested the 5 and 16 EMA with that 1% distance on a basket of about 50 top stocks. And I believe the average win rate was 78%. And then we said, let's do the same test, but let's use the weekly charts instead. And the win rate was about 78%. So they work really good together as verification. So again, the easiest way to trade it, enter on first green signal, straight from the scanner, sell on first yellow, take profit. So again, to be clear, you just enter on green and then sell on yellow. So why do I prefer selling on yellow when swing trading? Well, it's because you can always enter again. So AJG, for example, buy, sell, probably didn't make any money there. Yellow, but we got another entry here. I can buy and sell, made good money there. Buy and sell, make good money there. Buy and sell, make good money there. But if you prefer, if you're just trading the stock, you can just hold through the yellows or hold. Actually, if you're going to trade the stock and you're in it for multiple months, you don't want to sell right away, I would use the weekly charts because that's going to give you a longer perspective there. All right, what about trading to the downside? Same exact rules, just flip them. So go for the weak sectors, use the Newton short scanner, verify weak bearish trends. Again, no holding through earnings. Enter on first red, take profits on first yellow. For example, here was one we did trading the downside on FANG. Enter on red, profits on yellow. Enter on red, that one still ran. Pretty easy, right? Enter or buy puts. You don't have to short the stock. You can just buy puts. Now, you can jump into trades late. However, it just lowers the overall profitability. Ideally, you just want to use the scanner to flag the ones that are entered or that have a new entry that day. All right, let me pause here, see if we have any questions for you guys, and then I'm going to jump into the magic.
Yeah, there are a handful of them. You want me to hit you or you want to read them?
Yep, hit me with it.
So one question was why not the 8 and 15 EMAs?
Yeah, we just tested all sorts of EMA combinations, and 5 and 16 was the best across the broad basket of stocks.
And how does this differ from Magic Momentum?
We're going to cover Magic Momentum next.
Okay. A lot of people asked where they could get it. I just posted the link to the Newton replay. I'll pin it in case anybody missed it. You can watch that presentation and see how to get it. But basically, it's a scanner, and with the scanner, you get the indicator, right, Graham?
Yep, it's all built into one. We're actually going, if you just want to drop the link to the checkout page, you could do that too.
Okay.
If you guys want, I don't remember the exact pricing. It's under $1,000 for lifetime.
Yeah, I think it's 750.
750.
I think.
And the cool thing is it's a one-time payment for lifetime right now. We're actually in the process of upgrading the members to get a full online software like we did with Apex and On the Clock, in which we're going to, probably bring that out in 2 months, I would say, if I had to guess, about 2 months. And we're going to upgrade all the current members to get that software. And we're probably going to charge a lot more. Just being honest, so I'm not going to twist your arm or anything. It's up to you guys. If you like what you're seeing here, it's a good time to get in on it simply because we're going to have a huge upgrade coming and the price will be going up.
Yeah, so Simon, this is actually neither TradingView nor browser. This is Thinkorswim.
I'm showing Thinkorswim here.
Can this be used for intraday trading?
Yes, it can. If you guys want to trade intraday, if you want to day trade with Newton, instead of 5 and 16, flip it to 5 and 30 EMAs. Now, the code for Newton, once you have it in Thinkorswim, it automatically adjusts. So if you change the chart view under 1 day, so if you go 4 hours, 1 hour, 5 minutes, whatever it may be, it's going to automatically update the code on the back end. So this helps us eliminate a lot of the entries. The reason we slow down that EMA even more is because with the 5 and 16, they'll both move pretty fast on an intraday chart. Now, we tested this for the 5-minute chart to fine-tune this number. So if you're going to day trade with it, 5-minute chart will probably work the best. But other than that, everything stays the same. 5 EMA above 30 EMA, and you want at least a 1% expansion, which you can calculate on your own, or again, the Newton momentum indicator tells you. So like GE, for example, is at 1.39% expansion.
And that adjusts the calculation based on the chart, right? Like if you go
so if I flip to 5 minute here,
then it's a 5-minute calculation.
If I flip to 5 minutes, it's going to go to the 5 and 30 EMAs. Still looking for that 1% across those two EMAs. In this case, that's going to be 5 bars of 5 minutes and 30 bars of 5 minutes. But it still works the same.
Is it only available for TOS?
No, it should be in TradingView too.
All right. Any rules of thumb for trade construction as far as spreads or straight options or stock?
Sorry, I was reading the chat. What did you say?
I said any particular trade construction that goes with the trading with this, or does it not really matter?
If you guys are trading, if you're day trading, you probably just use basic calls, basic puts, just because they're going to be more sensitive. My favorite way to trade is with the wrap order. This is what we've been doing in like the perfect income program. We've been using Newton actually. We've also been doing this in the NVIDIA Elite program too, where we take that wrap order and shift it out of the money for bigger results. Now, of course, we have recordings on those two trainings in the $1 membership area. It's also in the Newton membership area too. But again, if you want to, you can just do call and put options if you just want to trade them. Just give yourself a little time so you don't eat so much time decay. But again, typically I like to wrap it or use my Elite options slightly out of the money debit spread. All right, so let's look here now at the Magic momentum, which we had quite a few questions. This is the newest piece we added. So let me squeeze this higher. The Magic momentum uses that Newton calculation and lets us know it's going to be much more sensitive. It lets us know what is the change in momentum day over day. So right now, GE Well, obviously it's up 2%, so it should be higher. But if you look at GE on the daily chart, flip green, that's a positive entry. The magic momentum overnight, we've gone up 0.38%. So that means the expansion between the two indicators grew 0.38% day over day versus here they shrunk a bit. So what I like to do, and let's look at SanDisk. I'm not sure what the overall reading. Okay, here's a cool one. Obviously, we still have green here on Newton, but what I like to do is try and time it up when the magic is flipping back in line with Newton. We can sometimes get even better entries. Let's see. What's a stock? I need to find a stock that would look really good for this.
Simon, it is available for TradingView already.
Let me just do this.
Shadicus, a wrap is a particular type of vertical spread, and there's training on that in our $1 members area. If you want to join that, there's a ton of stuff in there for just $1. You get lifetime access, and one of the trainings is on wrap orders. Here's the link for that.
Let me see. Let me see. So here's a good example. And these charts are getting really squeezed. Here's a decent example here of like, for example, Costco's momentum reading on Newton was red, going down, down, down. But you can see it start curling here. So while it's still red, it's trading below average momentum, but you can see that acceleration was starting. That's essentially what the magic momentum is going to show you. See, that's red up here, but green down here. That means the momentum is flipping trend. It's accelerating higher even while Costco's still down. So it can just give you quicker entries and exits as well. Another thing too is when you get to a peak of a move. So Costco, say you entered on green here, you're trading, trading, trading. And instead of selling when it flips to yellow here, which would have given you a nice gain, nice move, what you can do is you can use magic. So enter on green and then wait for magic to flip below zero and take your profits. It allows you to get in and out quicker. Now, again, the magic momentum, it's looking at this change in these bars day over day. So see how this jumps here? That's why we had such a big jump here. Jumps here, it's calculating that jump. Jumps, calculates that jump. Then we're going to get a slowing in acceleration as these start marginally jumping less and less. Just tells you the acceleration is slowing. So that's why we like the magic momentum indicator in there as well, because it can help you time the tops and bottoms a little bit better.
Does Thinkorswim have a chart system similar to Newton built in?
I am not sure, Dario, but if any of you guys know, feel free to let Dario know.
Yeah, not that I've seen. You know what I like, what I think is cool about the Newton indicator is that, you know, if you look at any of the charts that you were looking at, you'll see within a group, within an overall, let's say, uptrend or downtrend, there are a lot of gap ups or gap downs in the opposite direction of the trend. And if you're an emotional trader, you'll look at that and say, oh, we're long on this thing because we got a green signal. We're long on this. Up, it just gapped down this morning, and now I'm panicking. Well, if you look down at the Newton indicator,
Right.
you'll see it's still well in the green, and you don't have to worry about that gap down because it's going to turn around and come back up. So if you look at that, you'll see a lot of gap downs and gap ups within that period, but you've got that indicator to tell you don't panic, stick with it, and then that uptrend continues or that
Yep.
downtrend continues, and you wait for that indicator to tell you when to get out, not just some temporary, jump for part of the day. It takes a lot of the panic out of it.
Oh yeah, it definitely does. It makes it much easier, and it just visually what I can do is just check down here in the stock when I flip up the chart and I already know versus trying to guess. All right, so that's the basis of when I say momentum or trading above average momentum. That's the basis of what I'm looking at. Hopefully, this all made sense for you guys. Again, it can be a little bit finicky to do it on your own. That's why I just built an indicator for it here with the Newton indicator. Now, with that said, we are using this. If you want to know how I'm applying options to this, we are using this each and every week in the perfect income trade program, which Liberty, I'm not 100% sure what your question was there on the perfect income alerts. So I'm happy to answer it. But what we're doing here is, again, we're looking for this shifted momentum. So we traded GE, which we'll see where we finish this week. This morning, we were all the way up to our top strike for 100% return. We need that 325 or higher, but what we're looking for is we're timing up this curling of momentum where it's moving higher on a beautiful stock, and we're trying to time it up early with the magic. So you can see here the magic momentum, the acceleration under the hood is starting to pop higher, even while the momentum reading is still red. So we can trade it for 100% move, then trade it again as momentum flips back green. And in fact, GE may be one that we'll trade for a couple of weeks in the perfect income program, because look at that chart. Even if we can win 7 out of every 10 weeks, we're going to net 400% returns every 10 trades. So it's really, really fun. It's easy. And we do it each and every week. On Friday, I send new alerts for the perfect income program, and then we follow up the next Friday with our result and how we did. So if you guys are interested in that, we'll pull up that class right now to walk you guys through it. Again, entries will be tomorrow, so don't miss it.
Again, you guys know the drill. Profits, performance, not typical. We're not going to guarantee any future earnings because, of course, you could lose money on any trade that we talk about. But every single trade here is based on real trades sent out in real time. This is not back tested, not paper money. The average return here, winners and losers, 32% per trade in 4%. Guys, that's winners and losers. That's the average return we were talking about. 66% win, and there's my favorite number, an average win of 93%, even though most of these stocks barely move. So obviously can't guarantee specific future results. There's always a high degree of risk. If you want to go through, just go to Prosperity Pub and you can read all of that. So welcome. If you guys don't know me, I'm sure you do. I'm Nate Tucci. I'm the publisher here at Prosperity Pub. And when most folks are paying, $500,000 or even more to trade popular stocks like Apple, Nvidia, or Google, one Florida-based trader discovered a new way to tap into what could be some of the most cheap options in the market that you can take advantage of. Trades costing right around $1, right around a good George Washington there to get in. And with this unique trading method, he's been able to watch as these trades double in just a very short move each and every week. In fact, over the last 18 months, he's already done it 58 times, including multiple doubles